Good morning, everyone, and welcome to today's market update. Today is April 2nd. Let's take a look at the latest moves in US dollar index, crude oil, and gold, along with what to watch in the trading day ahead. So let's talk about US dollar. The US dollar traded in the 104.2 area on Tuesday, showing little direction bias following a series of weak US economic data releases. A lower than expected ISM manufacturing purchasing managers index. A drop in job openings and cautious comments from the Fed clouded the outlook for the dollar. Despite a small gain, the technical backdrop remains fragile and traders look forward to further macro drivers later this week. Traders appears to be more focused on economic signals than trade tensions, while gold prices, on the other hand, have failed to benefit from risk aversion and heightened safe haven inflows, highlighting a weakening sensitivity to tariff news. Data last week showed a decline in consumer confidence and rising inflation expectations, weakening the dollar's appeal. Market participants are increasingly pricing in stagnation risk, reducing the dollar's appeal as a safe haven. Treasury yields fell and investors flocked to bonds, limiting the dollar's upside potential. The US dollar index showed mixed technical signals at the start of the week, trading near the top of the intraday range near 104.4. The moving average divergence indicator, although still in negative territory, had issued a buy signal while long-term indicators remained bearish. The 100-day and the 200-day simple moving averages as well as the 30-day moving averages are all pointing downwards. The commodity channel index is neutral at 16.955 and the average directional index is close to 29, indicating moderate trend strength. Therefore, the short-term key resistance level are 104.4, 104.84 and 105, which is a round number, while support levels are clustered around 103.75, 2025 low 103.2 and 1 and the round number 103. So you can consider shorting the US dollar index near 104.35 today. Stop loss will be 104.50 and target will be 103.90. Let's let's now talk about crude oil. On Thursday, 27th March, international oil prices rose slightly as market participants were evaluating the impact of tightening global crude oil supply and the latest US tariffs on the global economy and energy demand. The initial market reaction to Trump's threat of a second tariff on Russian oil was muted. Oil prices only began to rise during yesterday's trading. On Tuesday, US crude oil traded around $71.4 per barrel. All oil prices climbed nearly 3.5% to a 5 week high on Monday on concerns that supply could fall if US President Trump makes a good on his threat to impose more tariffs on Russia and possibly attack Iran. Trump's threat of tariffs on Russian oil pushed oil prices higher, but the market remained skeptical. Oil prices rose slightly after US President Trump threatened to impose tariffs of 25% to 50% on countries importing Russian oil. Brent crude futures climbed on and WTI also rose. However, gains were limited as traders questioned the seriousness of the proposal. The market is fatigued by Washington's tariff rhetoric, which suggests that the crude oil market is unlikely to react strongly without concerted action. Crude oil prices have a positive short-term outlook, but be wary of geopolitical risks. Technical support and rising geopolitical risks keep WTI optimistic in the short term. If prices can break through the 200-day simple moving average resistance of around $72.19, a move towards 73 and 73.1 area is possible. However, uncertainty about US policy implementation and mild reaction from major Russian oil importers such as India have curbed the upside for oil prices. Traders should watch out for any policy follow up action or signals from OPEC. Therefore, on the downside, the psychological level $70 and 70.08, which is simple 50-day simple, and then 68.65 early week low level can be focused. So consider going long on crude oil near 71.15 today. Stop loss will be 71 and target will be 72.5. Now, so let's talk about gold. Gold prices retreated on Tuesday as traders booked profits, awaiting the US Liberation Day on 2nd April, when President Trump is expected to announce additional tariffs to improve the trade deficit imbalance. Gold traded at 3114. Gold continued its strong run on Tuesday, breaking above 3120 an ounce for the first time and hitting another record high as uncertainty surrounding tariffs boosted safe haven demand, sending gold prices to their strongest quarterly performance since 1986. Gold prices retreated slightly after hitting another record high of 3149. Uncertainty surrounding US trade policy and the Liberation Day on April 2nd remains, and investors turn to risk aversion for flocking to the safe haven appeal of gold. Risk appetite deteriorated as traders await the announcement of additional tariffs on Wednesday. As a result, precious metals prices have surged despite a recovery in US Treasury yields, especially the coupons on 10-year Treasury bonds. On the other hand, new favorable factors support the current all-time highs for gold prices. As the gold bull market shows signs of slowing down, gold prices have been hitting a new all-time high for quite some time, and whenever analysts predict a peak, gold prices rise further. The continued uncertainty in tariffs has brought another round of safe haven buying to the gold market. A small amount of profit taking or pullback may occur on the way up, but the ongoing bullish trend remains fundamental support. Remains the fundamental support remains as well as the geopolitical risk, trade tensions, and inflation uncertainty persist. Gold prices may continue to fluctuate at high levels from the recent trend. A rebound of gold is expanding. So far this year, gold have risen for more than 20%, and the upward trend may continue due to the uncertainty in the financial markets. The daily chart shows that although the 14-day RSI or the technical indicator is an extremely overbought state, that traders should not that the most extreme level is 80 due to the aggressiveness of this fluctuation. The resistance of gold will be psychological hurdles of 3150 and 3200, which is a round number. On the other hand, the first support for the precious metal is 3100. A break of this support would expose the 20 March high turn support at 3057, followed by the round number 3000. Consider going long on gold today before 3110, stop loss 3105, and target can be 3130 3135.